Hey guys, welcome back. So if you're new to the channel, today I'm going to cover some trade ideas and maybe go through some basic stock market analysis. So on this channel, typically I'm looking at the charts, reading the charts day by day, putting the pieces together and trying to anticipate where the market's heading in the future, given what the information the chart is giving me today. And then we lay out levels where we would trigger, trades potentially, and that's it. Today, I'd like to go through some additional trade ideas. I'm going to look at some various angles and some new stuff that I don't typically look at. So if you're new, give me a thumbs up. Appreciate it. And let's get right into it. So just kind of looking around at earnings next week. And we've got Phillip Morris reporting next week. So I wanted to start, I'm just going to take a look at some of these charts that we're going to get earnings for next week, some of the major players. These aren't going to have these aren't going to move the market in general, but there might be some trade ideas here. So Phillip Morris, I'm looking at a weekly chart here, and what I see clearly is a downtrend. There's been a downtrend in Phillip Morris. Really, it topped out back in 2017. And we've been downtrending ever since. So the stock from the high is actually down about 38%. So it's in a bear market. And that's very typical of a lot of stocks in the in the S&P 500 besides the FANG stocks and the tech stocks. So let's go ahead and look at this. But here's what I see. On the weekly chart, we've got positive divergence right here. On the RSI and the PPO. And I just use these two. You can use the MACD, moving average convergence divergence. But basically, we're not so much looking at, the levels of where it's high and low, but what we're looking for is a change in trend. Ultimately, we're looking for is momentum fading or is it gaining? And when you have higher lows on the PPO and the RSI, that shows that momentum's starting to build. Positive momentum is starting to build. The sellers are starting to lose control over time, and that's reflected in the fact that we're not making lower lows when we dip in the momentum, not necessarily price. So then what you look for is price, and you want price to make new lower lows, because that's the divergence. Price is diverging from the momentum. Momentum is not making lower lows, and price is. So that's the divergence. That tells you that even though price continues to fall, momentum is starting to build to the upside. And you flip it the other way for negative divergence. But this is positive divergence, and we've got a downtrend line on the weekly. We overshot it a little bit right here. But that was a false breakout, and that was followed by a nice impulsive sell-off to the March lows. But the trend line is pretty much here. You can see all the reactions along the weekly outside of this false breakout. So there's your trend line. Now, as we narrow it down to the daily, you can see right here that it's nice clean downtrend line. And we're just starting to consolidate below the, kind of at the top here at resistance. So it looks like, there's no breakout, but what we're looking for is a break above the trend line. So maybe that comes on earnings next week. Earnings are on Tuesday before the bell. So Monday would be when you'd need to make a play on this. However, there's nothing that says buy this right here because we're, below resistance. We're in a downtrend. The only thing is we have building momentum. You can see it clearly on the daily here if I mark that out. But very equally on the weekly. So we're starting to build momentum to the upside. We just need to basically see the break or the trigger. So momentum is just a narrative, and then you want to wait for the trigger. So a break above this would signal that this is probably going to be a buy, and this is a nice longer term buy and hold kind of stock. I think they pay a dividend. Let me see if I can find out what that dividend is. Yeah, this is paying a yield of 6.24%. So nice dividend, and fundamentally I like this one too. Going with the theme of a recession. And that's just because people smoke and drink more when they're losing their jobs and they feel bad. So, I mean, that's just basically the fact and the nature of humans. So that's what I see on this one. Again, nothing's broken out, so I don't see it as, a buy here. I'm just trying to cue you in ahead of a potential buy. So I'll be watching this one. Another one that's really interesting, KHC, Kraft Heinz. And I did take a position on this yesterday and made a little bit of profit. I pulled it, though, at the end of the day, and here's why. As I mark this out, this one has, a lot of good things going for it. For one, okay, you had bullish falling wedge right here, a bullish falling wedge. It broke out. It then back tested. If I run that out, this is probably going to, close enough. Did a full back test, and now we're breaking higher. So also inverse head and shoulders, it looks like, where you have the shoulder, the shoulders kind of, here basically. You've got the head there, and then, not as prominent of a right shoulder, but still you can kind of see the symmetrical layout of the chart. And now we're breaking towards the neckline. The neckline is really, you really got the neckline on this one is really about right there. But benefit of the doubt, you could just say the neckline's this gap. And that's the thing. We're coming close to the gap right here up at 36. It's about $36. And that's a big gap where this stock has not traded in that gap for quite a while, going back to February of 2019. So if we enter the gap, it's just a well-watched level. I think everybody's looking at this gap. And a gap entry, the first level of gap fill is about 17%, 16.5%. And then a complete gap fill would be all the way up here at 33%. So that's a trade idea. I like it. I've been in and out of this thing for the last year, so I've brought it up in the past on past videos. I've traded this one relatively successfully, and I am just now looking at getting back into it. So I got out of it on Friday just because it was ramping up into a Friday. I don't like stocks that ramp up into the close on a Friday. I prefer to see stocks move higher throughout intra week, and we're so close to gap fill. So here's the thing: I think maybe we gap up and open near the gap and then sell off. We have a little consolidation around this area. Maybe get a pullback down to 33.50, or potentially even down to this 31 area, and then we break. Eventually this is going to break the gap. It's going to enter the gap and fill. So we're just looking for when that is, trying to point it out in advance. This one's interesting. Snap, they report on Tuesday, the 21st, after the market. So you'd have to make a move on this one on Tuesday. Here's what I see on this one. There is clear, we do have some negative divergence in the RSI. It's not that steep, but you can see we made an equal high right here on the RSI, and prices made a new high right up here when it did that. Don't necessarily have that on the PPO, so not the cleanest momentum indicators, so that's something to watch. But trend line is pretty prominent, so you've got this trend line right here on the hourly chart, several reactions. You broke that trend line, and we've just been chopping sideways. So what I'd look for, ultimately it's hard to say what this is going to do. Does it pop earnings and do a full back test of the trend line? And if it does, that's the area that is objective to get short. So watch for that. Maybe earnings come out, they run it up into the trend line, and maybe it overshoots it a little bit and then fades and fails and closes, below that trend line. That's the area where you'd want to look to get short if it's around this area. So what I'm saying is if price gets around this trend line, that's a good area in my opinion. Or do earnings come out bad, they guide down, and you get the move down. Ultimately, there's no way to tell. The objective area to be short was right here at 24. It's about 24.80, and we're not too far off from it actually. So you really haven't, you're actually profitable if you got short right here. But again, they could back test. Momentum is starting to fade, so the thing is that the economy, a lot of these stocks that were tech stocks, I think are going to start missing earnings. And it's because the obvious trade is the stay-at-home trade. Everybody's staying at home. Everybody's using the stay-at-home, products. I get that, and that's kind of playing checkers, right? That's like, here's your next move. It's right in front of your face. Take it. But the chess play that I see is the advertising revenues for these companies are dictated by some of the other companies that aren't tech companies. Some of the companies that are seeing serious deterioration in their earnings, and they're having to cut their advertising spending in order to cut costs. And those companies are what generate the revenue for these companies. So that's more the chess play, looking at that move, and that's something you got to watch for. So we'll see as things come out. I mean, I don't know about this one, but in general, it has broken trend. This looks a lot like DraftKings or Redfin when they had this same pattern where they just went sideways, and they did back test and then they rolled over. So again, we have to just kind of wait. We're in kind of no man's land right here. So we'll just wait to see what happens. But if earnings come out and they start to roll over, that might set it up for, a substantial move down. So I'll keep an eye on this one. Here's United Airlines. I'm not really interested in the airline trades right now. They're really speculative trades where you're just getting these huge moves up and huge moves down. But we'll take a look, see what the chart says. So we have on this one, we've got a trend line here. It's about right there. Possibly bullish falling wedge. Let's look at the hourly here. See how many reactions we have. Yeah, so we could say that's a bullish falling wedge about right there. And we broke to the upside, and it was an impulsive breakout too, I would say, because if you can see, we gapped up and then it just ran higher about 10%. So that's an impulsive breakout to the upside, pulling back some, but so what I'd look for, this one actually looks bullish in general, I guess. If we're going to backtest and backtest the trend line, then that's an objective area to be long the airline. So we'll keep an eye on that. No divergences that I see really in play. And so those are not really giving us an advanced indicator or leading indicator of where this goes, but clear bullish falling wedge. So what I'd look for is a back test, and that's your objective area. Because, in that area, if it continues to go against you, you're wrong, you can get out with small losses. That's the name of the game here. Keep your losses small. And they report earnings on Tuesday after the market closes. The real show for the market next week actually starts on Wednesday after the market close. That's the day we get Microsoft and we get Tesla. So that's when the real action's going to start. Let's take a look at Microsoft here, and my trend line got marked off, but here's the trend line that I see. We broke down. So earnings is either going to confirm the breakdown or save it. But as of right now, we're below trend. This is resistance, and this chart on the hourly chart looks bearish. We had negative divergence. You can see it right here. See how the momentum indicators were making lower highs, and yet as you follow along, price continued to make higher prices. So price was a high here. You had a higher price right in this area, and then then we started to get the correction. So this move right here down was forecasted. This 5% down move was forecasted in advance by the divergences that were in play. So that's how you can use these divergences to give you a cue that momentum's gonna fade. However, there really wasn't a way to objectively just get in and short this move down. Yes, the divergences told us it was coming, but we didn't have any level to trigger the entry to know that, okay, this is the moment we were going to break down. It just wasn't there. So, the bigger picture is you had this trend line, and this is the area right here where you could have shorted Microsoft 205.24. And that is the breakdown of the actual trend line. And if you did that, you'd be up about 1%. So nothing super impulsive. The market's this is gonna most likely chop sideways until earnings, and it's just gonna go into a holding pattern. It might sell off a little bit more, but typically you see these things just go into holding pattern. The market wants to see what earnings says. So that is what I see. But again, it's broken trend. So we'll wait for earnings, and that's on Wednesday. And then we got Tesla, and I'll wrap up the video here. All right, so Tesla comes out with earnings again on Wednesday after the market. And this is going to be a big mover. This thing has run up into pretty much bubble territory. It's not justified by earnings or anything like that. So it's just momentum, and that's fine. You can see here, this is interesting. I'm kind of marking this out on the hourly. This was a potential top right up here. We had a reaction here, nothing really right in there. So I don't like it that much. You could maybe move it to something like that. But again, maybe this was the back test. We broke trend. It went sideways, popped up, did a full back test, and then, we're breaking down. So that's possible. Let's look at the daily. Yeah, I don't see anything on the daily. I do see, there's a trend line right there on the daily. Let's get rid of that one. Yeah, that does. See, I just marked that out. Look, you got the low here. You've got a reaction here, another reaction. And the reason why I like these reactions, see the bars, see the candles, how big they are. You hit the low here and then followed by a big impulsive move up. Hit it again, snapped right up. And then here came right down into it. Two big candles straight down into support, followed by the buyers stepping in, bidding it up with a nice impulsive candle. Came back down here, undercut it, and then we just went sideways. Ran up to a full back test. Didn't quite get there. Their sellers stepped in early as they looked to short it, and I was one of those shorters. And now we're just going this way. So earnings, I would not want to be long this thing into earnings. I'll tell you that much. And I suspect that people are probably going to take profit early on this one into earnings. I don't think people are going to hold this thing into earnings and thinking that it's going to be a good move for them. I think I wouldn't want to. So that's just me. But, if it's small money, then whatever. You can gamble with it. But look at the volume here as well. See the daily volume? As price right here, volume's dropping off. So losing volume. That's all I see. So the main thing is potentially, this was the potential breakdown level. We did a full back test, and now, the move is done. We're heading down. Where's this thing going? Well, you've got a gap right here at 650, and I think you do hit that. We've never filled that gap. There it is at 650. This move could be pretty aggressive to the downside, run down, hit the 650 level. And from the high, that's going to be a 63% drop. So that's what I see on that one. I'm not long-term bull. Long-term, I don't know about this one, but the chart tells me that this is set up to go to the downside. So probably going to need earnings to kick off the momentum, but earnings is going to be a wild ride on this thing. So be careful. And the market really closed just where it was at yesterday, just sideways. So that's really just some trade ideas and some things to look at. I'll catch you guys on the next one.